And then if anyone thinks about it, to remind me to stop it before we, after Christine's done, then I'm not doing like an hour and a half recording. It would be wonderful. I always forget. So kind of like I always forget to share my sound when I first share my screen. It's so ridiculous. It's the same thing over and over. All right, well, Christine, I am going to turn it over to you. I did upload the loan into my lending pad. However, I don't know what anything looks like because I didn't look at what they typed in or anything. So it is super raw.
No, you're good, Alicia. Thank you again so much for having me here. Mark is our other, Mark Allen is my other teammate here at LoanStream. He's not with us here today because he is babysitting his niece and nephew. So that's an interesting day for him since their mom and dad are out celebrating their anniversary. So family is important. So we definitely try to keep that focus and a positive mind too. So, but thank you again for having us. Super amazing. I'm going to go ahead and share my screen and turn off my video because nobody wants to see my face because that's not nearly as interesting as what we're going to talk about. So, as I mentioned here at LoanStream, we, where did it go? Hold on one second. We give you 2 AEs to work with. Myself and Mark Allen. And if I can just share the right screen, we will be on track here. All right. Everybody can see that, right?
Yep.
Awesome. So kind of one of the things we wanted to talk about a little bit today is our Max One program. So here at LoanStream, we have a couple of different Max One programs. One of them is our Max One and then our Max One Plus. We do have 2 different programs. The reason we have 2 different programs at LoanStream is because these programs were developed a little while ago, right? So keep that in mind when we talk about our Max One program. When interest rates were lower, the Max One program made a lot more sense, right? But as things changed and the seasons changed, let's just call it that, it definitely made things just a little bit different in our universe. So the Max One program was great when people weren't worried about holding on to a first and a second loan on their new home for 10 years so that it would be forgiven, because at a 4% or 3% interest rate, that wasn't scary. So clearly we all know the market is going to continue to change. So holding on to a 3 or 4% interest rate, no big deal. Holding on to a 7 or 9% interest rate, a whole different situation. So when I get to some of this, I'm going to kind of go ahead and skip through the Max One program because the rates are too high. You're not going to pass QM. You'll be wasting all of your seller credits on your discount points just to have a forgivable loan that would have to be paid back in the event that they refinanced or sold their home anytime in the next 10 years. So we don't really talk about that one too much. Our Max One program is super, super simple. In our Max One program, our Max One Plus program, it's a very simple second lien. It's a 3.5% second lien. We take that second lien, we amortize it over 120 months. And we, the interest rate on that program is 2% over the first. This is our Max One program. We're going to skip over that. Our Max One Plus, this is the one I'm talking about now that we use mostly. We have a minimum 600 FICO score. I'm going to tell you right now, if your borrower has a 600 FICO score, this program probably isn't for them. We do go down to a 600, but AUS is going to need a solid qualified borrower. So if they're a 600, stop first and look at their credit report. Why are they a 600? Do they just have limited credit, or is your borrower maxed out on their credit already? And do they have lots of collections or charge-offs or late payments? This borrower, you're not likely to get an approved eligible loan, and the cost, if you do, is going to be very high for the Max One Plus program. The Max One Plus program is really more designed for your borrower that has stable income. They have responsible credit. They've been paying their bills on time. They can show that they have responsible credit. So when we do 100% CLTV loan, it's not nearly the risk because we know we're going in with a borrower that knows how to make their payments already. So what it really is for is that person that's maybe a mid 600 to 700 FICO score borrower who just simply has not been able in today's market to be able to save 3.5% down payment and their closing costs. Now, one of the things that helps out a lot is we do allow you to have no income limits. We will follow all FHA guidelines. Some other additional things, you can have a non-occupant co-borrower. This is not your traditional DPA program. This is a very simple 3.5% second lien. We include it in their DTI. We include that payment. Alicia and I are going to roll through really quickly an example of how you can set that up in LendingPad so that we set you up for success, because that's what this is about, right? Just like Tony Robbins said, when you go into your day, you go into your file, you set yourself up for what you're looking at in the future. We don't want to look at a file if you don't know what your closing costs are. We need to make sure all those things are prepped ahead of time before you send your borrower shopping. But we follow FHA guidelines, as I started to say. So when we talk about that, yes, you can use gift funds. Yes, you can use seller credits. Yes, you can have a non-occupant co-borrower so that you can assist your DPA, your borrower with their DTI. Yes, you can use up to a 2-unit, right? You can do a 2-unit on this program. You don't have any income limits. These are all things that make this program much, much more different. I like to share a short story. I am also a realtor in California, right? I've had my real estate license here for about 20 years. And I recently had a rental property that we actually ended up doing a showing, and we had people come in with their applications to rent this property in Orange County. And as you can only imagine, I had hundreds of people inquire, which is why we had to do an open house. So we did an open house for this rental. I had 300 applications that came in the door. It blew my mind. Anybody have a wild guess how many of those applications had over a 700 FICO score and the borrowers were making over $150,000 a year? Why in the world would you want to rent a house? You should be buying a house. Now, I know everybody's on mute, so I'm just going to answer that question for you. Over 60% of the applications that I received, over a 700 FICO score, over $150,000 a year in income, and low debt. Their problems? Number one problem for all of them: why aren't you buying a house? I'm in the business. Why would I not ask this question? They couldn't buy a house because they didn't have 3.5% saved up because life happens. They could totally afford this program because it's not a problem to have that 3.5% second lien. So it's pretty simple. We talk a little bit here about our quick pricer and how you go in and price this loan in our VIP lounge. Now, we have a VIP lounge. If you don't have credentials, you can shoot me an email. My email is actually in my name here in the Zoom. I can set you up with credentials right away, but this is basically a snapshot of what it looks like. It's obviously, this snapshot's a little bit older because interest rates are higher now, but this gives you a little bit of an idea of what we're talking about. And yes, we can go lender paid, right? That's one other thing that you can't do in most DPA programs, right? Most DPA programs, you're going to be restricted to a borrower paid. Well, that doesn't help you, right? Because gosh, now where do I get the money to pay for my broker's fee? I want you guys to keep your compensation. I want to make sure that you get paid. So we're going to talk about, really briefly, we're going to talk about what lender paid means. You can see here on this lender paid situation, if I'm looking at this example, this is our Max 1 Plus program down below, and it's 7.25, right? Giving back a credit. Now, like I said, this is a little bit different than it is today. Obviously, things are a little bit different now. But if this was a cost, right, and we were talking about this, so say you're coming down to a 7%, right? You can utilize your seller credit. utilize your seller credits to offset your discount points. Congratulations, you just stayed lender paid and you passed QM. Use your seller credits. Now, of course, using your seller credits, you have to make sure you can go up to 6%. So you can definitely make sure that you have enough seller credits, which are happening in today's market, to make sure that you still cover your closing costs on top of the discount points. But those are just little things to keep in mind when you're pricing out your DPA. In our system, you're going to make sure to change your CLTV to 100% because that's what this is. This is a 3.5% second lien, bringing your CLTV up to 100%. I tell people not to click the button that says include down payment assistance because I want you to have all the tools. I want you to be able to see what that difference is between a traditional FHA product and a Max One Plus program, because I promise you they are not the same. And depending on your loan amount and your borrower, it might behoove them to consider going with a standard FHA loan and getting gift funds to cover it instead if they have that ability, because the rate is definitely higher. We do have some marketing materials that we offer for this program. And these marketing materials that we offer on our website are broker customizable. So there's a bottom section you can't see in the screenshot, but you can actually put all of your information in it. You can get your disclaimers in the bottom as well. This way you can distribute this information off to your realtors and your contacts so that you can bring in more business utilizing this program and talk about it more. One of the other things that actually wasn't in a bullet point, and probably need to add that in, there is no first time home buyer requirement. So don't worry about it. This doesn't need to be their first time. We do require, as in many FHA loans, that they go through the home buyer course, right? So they still need to do an FHA approved course. That's not as very easy. If you don't have that information, we can share a link with you as well so they can go online and do their course. Doesn't take very much time. Cost is usually about $75. Couple of things we don't do: nothing over a 2-unit property. So no 3 or 4 unit properties are allowed, only a 1 or a 2 unit property, and no high balance, right? You're going to need to stay out of your high balance loans. Make sure you stay within your conforming limits, and you'll be perfectly fine with that program. Before we jump into how do I set this up in LendingPad, does anybody have any questions about the DPA program?
I do. What's the rate?
So right now, our max rate as of yesterday was about 7.625, and the cost on that rate is going to be completely different based on whether or not you go lender paid or borrower paid, and what your customer's FICO score is and your loan amount. So those amounts do vary, but we do max at about a 7.625, which is where everybody usually ends up going, is between 7.25 and 7.625, depending on their borrower's FICO and your scenario.
Okay, thanks.
And in addition to that, your second lien is 2% over the first. Just a reminder.
So piggyback with the rate. Hi, Richard. If we were to go lender paid, the rate's going to be dramatically higher, presumably, and then I suspect you're going to have a problem passing at that rate. Would that not be the case?
It depends on your FICO score, but absolutely. And that's why I always tell people, talk to your real estate agents and talk about getting seller credits, because you can stay lender paid and you can pass QM if you have sufficient seller credits to cover your discount points. Remember, on the CD, at the time of the CD, you can shift those discount points to the seller's side of the CD and take that from your seller concessions, and that will cure your QM fail.
Yeah, it's the same conversation I had way back in the day when I was doing home ready with people's mortgage. It's you have to have seller concessions. That's just the way it is.
Yeah.
Home and buy. Yeah, sorry, not home ready. Home and buy. Yeah. Okay, just wanted to confirm.
Absolutely. Any other questions?
I have another question. Do you have to keep it for so many years?
So if you're talking about to keep it being forgivable, the forgivable Max One program, you do have to keep for 10 years. We do not subordinate either of these loans. The Max One Plus program is a 3.5% second lien at 2% over the first, right? And it is amortized over 120 months. So being that it's a fully amortized loan, just like any other second lien, you can refinance that loan. We will not subordinate it, but you can refinance it at any time as long as you're following your FHA guidelines.
Okay.
One more question. Maybe you addressed it, and sorry if you did, and I knew I missed it, but debt
Okay.
income ratio restrictions, or is it just whatever?
Good point. I didn't cover that. We do not have any overlays for DTI. So basically, you're going to follow your AUS approval. I've seen them. I will tell you, depending on your borrower's credit and their credit history and your loan scenario, I have seen them approved and close up to 56% DTI, but nothing higher. But good point. Thank you so much. I actually, that was not on the slide. Good point. Thank you. Any other questions? This is a great program, guys, for your borrowers that are qualified and they literally just do not have enough money to be able to close. One of the other things you can use too, and think about it, is things that will strengthen your file, reserves. Right. And the reason I'm going to walk into that is because Alicia's going to share her screen. We're going to kind of show you really quickly how to set up this loan and lending pad, which is super important. One of the number one reasons that we have loans, these DPA loans that come into us and they fail, is because we have not properly set up the loan and lending pad to make sure that our AUS findings aren't fake. Right? If you don't have your closing costs properly set up in lending pad, if you don't put in your discount points, if you don't put in if you're going borrower paid, you don't put in your borrower paid compensation. These are all things that are super important and can affect your loan. You don't put in your third party closing costs. These are all really, really important pieces to remember. A lot of us like to kind of throw things on lending pad and then worry about it when we upload it to the lender. But I'm going to tell you, before you send your borrower shopping, make sure you don't have a fake news AUS, right? That is, that's really important to make sure you're giving me real stuff. If you've forgotten to put any of your closing costs in, I can guarantee you just gave AUS fake reserves. And that's probably the number one reason, fake reserves. And then we come back to you when you're going through the process and your underwriter is telling you, gosh, Christine, we're going to, Mr. Loan Officer, we're going to need 2 months of reserves or you're not going to get it approved eligible. Because remember, we will not manually underwrite 100% CLTV loan here at LoanStream. It's too high of a risk, and we just want to make sure that your borrower is set up for success. Nobody wants an early payment default, and nobody wants an early payoff, right? Nobody wants to see an EPO conversation happen for your borrower. So we're here to protect you, set you up for success. Nobody wants to charge anybody back. So Alicia, do you want to share your screen and we can kind of talk through what it looks like in lending pad to set up a LoanStream DPA? And Alicia, I know that you just
I have,
yeah.
I have one question. Sorry. What is your typical, I have a borrower right now that would need to close in like literally 4 weeks. I mean, what's the turn time usually look like? Again, depending on quality of file and submitted and everything.
Right. And Valerie, you hit it right on the head. It's all about, what comes in can come out quickly, right? So if you get me good loans coming in, then they're going to be easy coming out. It all depends on how quickly you can get your appraisal. Our current turn times, I can tell you, if you register a file with me today, you'll have your disclosures out within 24 hours. As quickly as your borrower can sign their disclosures, we'll have your FHA case number assigned because this is an FHA loan. We'll assign your case number for you. You can order your appraisal and we'll have your file to underwriting within 24 hours, and you'll have your initial approval out in 24 hours. So all of your conditions, depending on how many times you have to send it back to us. Those are about a 48-hour review time, 48 hours for CTC to docs, just because we like to give our closers time, especially is the fact that we have Nexa loan officers all throughout the country, and most of our closing team is here in California. But we do try to make sure that we give ourselves a good 24 hours of time to be able to balancing docs, or balancing the CD and get the docs out so that we can make sure to have a nice smooth closing the following day. So all in all, we definitely have done these loans in less than 30 days. But it just like you said, Valerie, it just depends on how quickly you can get things over to us and get your conditions cleared.
Thank you.
All right. So if nobody else has any more questions, Alicia, we're going to just jump into this really quickly. I always start with making sure that you've selected the wholesale lender and you've selected LoanStream. So I'm going to start with that, Alicia, because there is some pieces here. If we want to go down to the bottom right-hand corner and assign the lender to this file as LoanStream.
Okay,
and
so you are definitely gonna have to walk me through, because some of the people on this do know that
No
they
problem.
often do this for me, and then I pay them to do it. So
No,
I don't
you're all
know
good.
where things are.
No worries.
I go in here very infrequently. I leave it to them to help.
Hopefully the recording picks up the annotations on the screen. So
Yeah.
here when people one of the people one time some of the people just don't remember that LoanStream is all one word. So just remember that it's all one word. You can save this information here. The reason that I have you go in and select the lender first is because it's going to pre-populate some of this information. You can just go ahead and save changes on this screen, and we're not going to edit anything quite yet. The first thing we're going to do after this auto-populated screen pops up, is it saving, Alicia? Save here at the top.
Oh, sorry.
Yeah, that's okay. Thanks. So the first thing we're going to do is go ahead and edit the details of the loan, right? So we're going to go to the details of the transaction, and we're going to set up our DPA. So let's just use for an example on this file that we're going with a 7.25 rate. So first you're going to change your loan type to an FHA, your down payment to a 3.5% on this one.
Okay, hang on. It didn't click when I.
It's okay.
Okay.
FHA. Yep.
FHA.
And then let's change your down payment to 3.5%. And just note in our head that 3.5% is $6,300. Let's put 7.625 in your note rate for your first.
7.625.
Yep, for this exercise, yes. And then in the other financing section, that's where we're going to drop in the DPA. So this is your $6,300. We're going to include the ratios. We're going to hit that button to include the ratios. The reason we're doing that is because we want to make sure that it's included in our housing, right? So, and then your note rate and your qualifying rate are both going to be 9.625 because they're 2% over the first. So both of these will be 9.625.
Thank you for putting the red mark.
You're good. Now, the next thing that we're going to do after the note and the qualifying rate is the term and the due date. Remember, I said this is amortized over 10 years. So both of these are going to be 120 months because that's what LendingPad is taking. It's not taking years, it takes months. And then after we have that portion, the source type is going to be the lender because we are going to provide that loan to you, right? The great thing about our program too, that I did forget to mention, there's nothing else for you guys to do in this loan. When we talk about the, I think you still need to select a program possibly too.
Sorry.
That's okay. Sorry. The one thing that is great about this loan is you don't have to submit anything special. The only thing you're going to do is submit one loan to us. We will take care of the second loan. We will set up the second loan entirely. And so there's nothing.
The terms of the mortgage, I don't even remember where we were.
Yeah. Terms of, it's fine. Yeah. Any of the edit screen will take you back to where we need to go. Terms of mortgage is fine. Scroll down and let's choose the program, right? So it's a 203B. The FHA, oh here, it calls it a FHA 30-year fixed.
Okay.
Perfect. So now.
Anything else I still needed to do?
Yeah, this, if you, well, let's just kind of pause here for 1 second. Let's talk about this proposed housing expense now that we're looking at. So here's your first lien, your first lien FHA loan. Here's your 3.5% payment for your second lien. And then obviously if we had taxes and insurance entered already, that information would be here. Your MIP, your FHA MIP, and then this is going to be basically your total loan amount if everything was filled out here. So that's what we're kind of talking about when we talk about include your payment in your DTI. We want to make sure that you're looking at your first and your second so that we have everything accounted for. So Alicia, if you want to save changes here, that make sure that we've got all that kind of information locked in. And this is a great score that we're working with, right, Alicia? Because this borrower, they have a 723 FICO score. So this is probably a great program for this borrower. They're showing that they have responsible credit. They probably don't have a lot of collections or late payments because they wouldn't have a 723 FICO score if they did, right? So maybe this person just simply doesn't have enough money. So the next thing I do is let's go talk about our disclosure. We're going to talk about fees, right? And for the purposes of this exercise, we're just going to pretend that this is going to be a lender paid transaction, because I think you're going to be close, but 723, you should be able to absolutely keep this one lender paid. So the first thing I'm going to do is tell you to delete your document preparation fee, because that's fake news. I can't get LendingPad to make it go away. It's super irritating. And to be able to get your rate to pass QM, we already rolled in the underwriting fee when I priced this out, right? So when you roll in your admin fee, that means you're going to buy out your admin fee. So you don't need to have that in section A of your LE, because
So
we've
am I
already
just
included it
clicking
in.
the red X?
Yes. You know what? And I can't click on it. Hold on 1 second. I've got all of our faces in the way and I can't see the
I got
stuff
it.
on the right hand side. Okay, there we go. So yes, so now let's say we're lender paid in this transaction. Let me get my little pencil back. So sorry, guys. Okay, so let's just say the cost on this loan is $500. You've gone lender paid. Our discount points are $500. For this exercise, I'm just making a random number here. So if you go in, you click that little calculator button, you can put in your discount points, because we want to remember not to forget that. We're just going to put 500 for now so that we don't waste everyone's time with the actual detail, because this is just an example. Go ahead and set that information. Save the changes on this screen because I'm only looking at one thing. I want to see your whole thing. Perfect. We want to make sure that you add an appraisal fee, right? Some loan officers like to be very thorough, and they will go in and also add a 1004D up front, just in case, because you never know, you might need it, especially on an FHA loan. If they need to make any corrections, you don't want to be troubled by making sure that you do a COC within 3 business days. So if you just disclose it up front, you can always take it back out later. For an appraisal fee, just pop in whatever's normal there, Alicia, in your area. So $700 if you want, whatever.
What's 600?
Sure, sounds good.
I think it's like 5 something,
Yep.
but close to 600.
And then let's add an additional fee in this section if you wanted to for the 1004D. So add a new
Where's
fee at the
that?
top of the screen.
Oh.
Yep. And then I usually just tell them just type it in. You can, right? So in the name of the information. The other reason that we go through and make sure all these fees are here is when you register the loan with us, I'm going to ask you for a fee sheet, right? So in that fee sheet, so that we can set up all your fees in our system and Encompass, we do ask you to provide us with a fee sheet. So we're going to provide the fee worksheet summary here from the disclosure tab. $125 is fine for right now. All right, save changes. One thing I will tell you, if you're using S&P, a DPA is going to cost you $1,095, not $995, because they do charge a little bit extra for their for their processors to do a DPA loan. The other thing that sometimes people will add to this section B is a verification of employment fee. Those are great. You would add it the same way that you just added that 1004D. So you can edit this $995 by clicking on the pencil, or you can just click on the $sign. It does this, the amount, it does the same thing. And
sorry.
yeah, no, I'm just giving people another example. How to do it.
So I can click there.
Sure.
Okay.
Yeah. And just hit set. Beautiful. Now, one of the other things, you can save changes on this page. One of the other things we want to verify in this loan, we'll come back to the smart fees here, but one of the other things that's not a smart fee that we need to go down and make sure that we're looking at is sections F and G. So in sections F and G, and Alicia, if you can scroll down to F and G, section F is our prepaids, right? So we never prepay property tax, but one of the things that we want to do in this prepaid is we want to make sure that we estimate in prepaids 12 months of hazard insurance. This is another thing that's super important. If you don't add in your hazard insurance, then that's another thing that could be showing fake reserves. So add in your 12 months. You can just literally type in the 12 right there where the circle is that I made for you. Yep.
Oh.
That's an editable field. And then here we can just put in the amount of the insurance. I don't know what your average is, $100, whatever it is a month that you normally have for insurance.
I usually put 80. I don't know.
Sure. Whatever it is that you normally use in your every area is different. So, and then we'll save changes on this screen. And then so now we've accounted for our prepaids in our insurance column. We're going to look at our initial escrows as too, right? So in our initial escrows, we'll have the same information we already have the 80 for the hazard insurance. Usually your impounds in this are about 2 to 3 months. It's just whatever you're comfortable with. So it's just remember making sure that your numbers are the most that you could possibly have. And then whatever you would normally, every state is different. So whatever you normally collect in prepaids for your property tax. So if you're in a state that does it once a year, you might put 6 months here, right? Because it's however you calculate it based on your particular state, and then whatever your taxes are typically for that property. Now remember, section G is section F and G are not sections that are cured items. These things change with time. The only reason we're putting it here is we want to make sure that, remember, we don't have fake reserves. So save changes here. And I say that a lot, guys, because I promise you, lots of people forget to put all this stuff in and they don't think about that important, those important aspects. If you had lender credits on this loan, this down here at the bottom would be the place that you would enter your lender credits. Any other things that you might have, you would add to section H. So remember thinking about if you're working on a condo or an HOA, remember to cover your upfront HOA dues if you have those. Make sure to cover any condo cert costs that you might have. And then also one of the things, if you are in a survey state, don't forget to add your survey fees in. Those are very important in survey states to make sure that they're there. Now, from here, I want to go back to the actions tab so that we can talk about how you put in your smart fees. But before we can put in smart fees, it looks like, Alicia, you're missing a city and a zip code. So we're not going to be able to get smart fees until we enter the city and zip code. So let's go back to the overview tab.
Oh. Okay.
And we'll leave the TBD. That's perfectly fine. Just pick a city in Arizona and put a zip code in. Otherwise, your smart fees don't know where to go. They don't know where to pull smart fees from. Perfect. And then save those changes. And then we're going to go to the Actions tab. Beautiful. In the Actions tab, they recently changed this. I believe the answer here is to go to the title integration screen. when this information pulls up, use your drop-down box. I believe you're going to select a Unisource title, and that was the worst circle I've ever made in my life. Your request type is going to be a title fee quote. It's going to ask you next for the transaction type. This is obviously a purchase, and then send request. By doing this, we're basically asking LendingPad to give us a title fee quote and input that information into our disclosure tab. So that way yep, and you can just save changes here. Now, if we hop back into our disclosure tab, you're going to see in the disclosure tab, you'll now see that we've populated our section C, title and escrow fees. Scroll down. This is just a good place to kind of look at it. So now you'll see that LendingPad has pre-populated title and escrow fees in here. So this is a good place just to give us kind of an estimate of what we're looking at. We don't want to leave out all these fees, right? Because look at this. This is a ton of fees that if we didn't put this in and we ran AUS without having this information, guess what? Fake reserves. So from this screen, I want you to go, Alicia, to the fee worksheet summary. This is one of the easiest places to review your fees. And I also have people go to this sheet because this is the sheet that I want you to print and upload to our system when we ask you for a fee worksheet. Now, if we come down here, we're going to see a couple of things: our purchase price, our estimated closing costs. We have our subordinate financing. That's our DPA, right? Our $6,300. And we have any EMD would appear in this section as well. If we had entered the EMD, seller credits would also appear down here at the bottom. So we know in this section, we can see very, very clearly, we know after our DPA has been entered on this loan, this borrower is going to need to come in only with $4,775. So you want to go back to your...
Sorry if I may interrupt.
You're good.
The lender's coverage seems pretty low.
Yes, these are just smart fees. So if you want that lender's coverage to be higher, I would definitely go in and I would modify that. All we pulled into this particular information is the smart fees. If you actually have a title fee quote, I definitely recommend using the title fee quote to get more accurate title and escrow fees to get an idea. And you can override that information at any time in LendingPad so that you can get the correct information. This was just what smart fees pulled in.
That was super low. That was just to your point about fake reserves. I mean, that's like $1,000.
100%. And it's here in the titles coverage as well, $996.
Yeah, for owner.
Yeah.
Yeah, but wouldn't be for, okay. All right, just wondering.
Exactly. Yeah, that's just a smart fee. Like I said, definitely watch these fees, because if you see something like that, go in and change it, increase it. If you know that you pulled in smart fees and you know that your escrow company usually charges $775 for this, don't leave the $560, put in your $775. Get as close as you can to whatever your actual, closing costs are going to be. And I always encourage everyone, overestimate. All right. From here, you could print this screen if you were ready to print and start uploading your loan, but you can go ahead and close this and just go back to LendingPad, Alicia. I hope I answered that question. Does that make sense?
Makes sense to me.
And it's like $1,000 low. And $1,000 is a significant figure. You got the owner's premium in there, but the seller pays that. So
Yeah.
Lender's coverage, and again, it's like $1,000 low. You're just supporting your point about fake reserves.
100%. I completely agree with you. I don't control the smart fees and LendingPad, or I would definitely change that. But that's definitely why you should. That's a good point to make sure that you're reviewing these things and changing them to what is probably going to be the best for your file. To go through another exercise, Alicia, if we can just jump to the loan application. So we know in this situation, and this is just an example, remember, but we know in this situation, we know our borrower needs $4,700. So I always encourage people, go to your assets and liabilities tab for me. Make sure before you start running AUS, so you don't run it 1,000 times, make sure that you have sufficient assets to close this loan. You also want to make sure that if you've been working with another lender and you've been looking at a grant or anything like that, you do not enter the DPA in this section as assets for this loan. You've already put it in the other financing section. If you enter it here, you just gave me fake assets, and I don't want duplicate assets in your file. That will definitely also result in the wrong information. So we know we have a good credit score. Our DTI isn't bad. It's 33 over 48, definitely something that qualifies. Hopefully by now you've already reviewed your borrower's credit report to make sure that they are a responsible credit borrower. And we've entered everything into the disclosures tab. You've reviewed your fees. You reviewed to make sure that your borrower has enough assets for your cash to close. From here, I would go in, Alicia, into the actions tab and run your AUS. I'm not sure if you're ready to do that or if you're willing to do that, Alicia, but if you want to go ahead and run AUS from here, going to the actions tab at the top of the screen.
Do you need me to? Because I'm definitely not ready to.
Yeah, no worries. We don't need to. I just wanted to show people kind of where it is if we're covering a lot of the basics, right? So just in the same place that you would definitely be looking to add your title fees as smart fees, you would do the same thing here. We're not going to hit the send request button because, like you said, we're not ready for that yet in this file. One other thing I want to point out for some of the new loan officers we have out there, very important, when you have two borrowers, if they are married, you do need to have a joint credit report. This is very important. If they are not married to each other, if they are not married to each other, then you want to make sure that you have separate credit reports for each borrower. That is something that sometimes people forget about, or maybe they're new and they haven't come across that situation. But joint credit reports are only for borrowers that are married to each other. But that's just about it. Yeah, that's just about it for this file. So that's kind of a good overview. If anybody has any other questions, otherwise I'm gonna run away.
Well, thank you. I appreciate all your knowledge and support, and the fact that you walk things through in Lending Pad, I think is huge. Most AEs won't do that. So
yeah, I've made it a goal of myself, Alicia, like I said, to learn something new every day. And one of the things that I learned when I came here is not everybody knows how to use Lending Pad. So if I'm going to get a loan, I sure better learn, number one, how to make sure that you guys assign it to me in Lending Pad, because I want my name to come up in your life every day. But I also want to make sure that you know how to set yourself up for success. I do not want to see loan officers flying blind, right? And if you don't know how to use Lending Pad, you're going to fly blind. And we don't have a good system at LoanStream for you to preload your file to run AUS with us. So I like you. Lending Pad works great for this. It works great as long as you put your information in correctly and you don't forget anything. I always encourage people to print your AUS findings, read them, and upload them with your file. That way the underwriter knows exactly how you structured your file before you sent it to us. So those are just my tips and tricks and how you can best set yourself up for success. And if anybody ever has any questions, I am in LOS support in the LoanStream room daily from 10 to 4 Pacific time. If that's we're in Pacific Daylight Savings Time or whatever we're in now, we can't decide when we're going to have our time changes here in California anymore. But if you're looking for me, that's typically where I am best found. You can also text or email me. Those things are very easy, but I will promise you that if it's between 10 and 4, I probably won't answer my phone. And that's because I'm in LOS support. So I hope that everybody can understand that and bear with me. But the very first thing I prioritize in my day is LOS support. Email comes second because I'm really good at multitasking. And and then phone calls and text messages. So just keeping those things in mind, the best ways to communicate with me. My partner, Mark Allen, is our early bird person on the team. So he's usually the one that's up bright and early at 6 o'clock in the morning. So we always joke around that if you're having your coffee, call Mark. If you're drinking your glass of wine, call me because I'm a woman. So, but I'm here when you guys need me. So if it's, my door is always open. Nights, weekends, you've got a bar where you just really need help, please don't ever hesitate to reach out for me. And I'll do my best to help anyone out. Okay.
Awesome. Thank you.
All right. Thanks, Alicia. Have a great rest of your day, guys. See you again.
You too. Bye.
Bye.
All right. Well, at one point we had 7 loan officers on here. We're down to 4, or maybe 5. I guess as Valerie's in the background. So that was some.
You can stop recording.
Huh?
Did you stop
Oh,
recording?
thank you.